We don't know what market rent is. Nobody has done the work to find it, so we do the work to find it. And a small North Georgia town, we bought a property with a $60 10 by 10, and now we're leasing units at $139 for a 10 by 10. We're going to increase revenue year one by close to 60%. And when you do that at scale on a $6 million acquisition, very soon after you do that, these properties can be worth $10 million, $11 million, $12 million. Hello, good evening. How's it going? We had a very valuable and interesting discussion take place on Twitter. I made a tweet and I said 100% occupancy on multifamily or self-storage, so full, all of your units rented, means you're leaving tens of thousands a month on the table from a cash flow perspective and millions on the table if you are to sell or refinance. And I said in the tweet, push rents until you're at 85 to 93%. And to spark a little bit of lively debate, I said, you can argue with me, but I'm right. Then I said, want to make millions? Look at the comments to the above tweet from the people who disagree. Buy their properties, do the work to find true market rent and accept some vacancy, sell the same properties for 20 to 40% more than what you paid. And what took place was, I'd say 20, 30% of people who commented were attacking me as a parasite and comparing the modern day economy to Mao's China, where they basically took all the property and murdered the landlords. The woke mob came after me a little bit, but other than that, we had several people that I really, really look up to who commented and provided their feedback. And I was a little bit off on the stabilized ideal occupancy for multifamily. That's around 93 to 96 to 97%. But I was right on the money with self-storage. I know that because I'm in the business. And I just feel this is something that I feel very, very strongly about. Entrepreneurs, real estate investors, the number one mistake they make is not properly managing revenue. Revenue management takes a lot of work, a lot of risk, and a lot of analysis, and a lot of guts to lead the market in rents. And the best operators lead the market in rents. It's always true. They find a way to make the product superior, like Scott Everett. We'll talk a lot about him in this episode. Or they find a way to lease units better than anybody else, or they're buying the right deals in the right locations where they can charge more than anybody else and get more revenue. But the bottom line is that in any town in America, there are hundreds of properties with sub-market rent. Owners that own the real estate that are not charging enough rent. And this spells opportunity for us. So what we do with that opportunity is really up to us. And I guess first I can talk a little bit about self-storage, and I guess I'll even back up. If you own a small 2-unit apartment or 50 units in town spread across a couple different properties, it's really hard to implement true revenue management. Revenue management meaning increasing rents and charging more and more and maximizing revenue per square foot of a property. When you do reach scale, this is the big advantage. And the big operators who have thousands of units, tens of thousands of units, 100,000 units like Scott Everett, I think it's 30,000 units, he's sold a lot, or 10,000 units like me, you start to take an analytical, data-driven approach. And you're not worried about losing one or two tenants. You're worried about maximizing rent. And you can use data to look at how far you can increase prices, what you can increase them to, and finding true market rent. So our wheelhouse at my storage company is to find a market where nobody has done the work to drive revenue. Nobody's done it. Nobody's done the work to find true market rent. They're either not renting units at the right price, or they are not actually marketing and bringing tenants in and charging what they could be, and they're full. What we do at Bolt is do the work to find true market rent. An example is we go and look at a self-storage market in a small town where we're considering buying an asset, and they're charging $60 for a 10 by 10. But everybody in town is full, and the ones who aren't full don't answer the phone, don't market, don't use lead generation, and don't do a good job operating their self-storage facility. So when we go in and we're thinking about buying a property in one of these markets, we don't know what market rent is. Nobody has done the work to find it, so we do the work to find it. And in a small North Georgia town, very recently, we bought a property with a $60 10 by 10, and now we're leasing units at $139 for a 10 by 10. We're going to increase revenue year one by close to 60%. And when you do that at scale on a $6 million acquisition, very soon after you do that, these properties can be worth $10 million, $11 million, $12 million. Another example is a property up in upstate New York, a small tertiary market, 30,000 people, and the busy season is upon us. And there's not much storage on the market. It's another reason why I love operating in smaller towns, because there's not a lot of supply coming on board. But every single person in town, all of our competitors, rents their 5x10 units at $65 and their 10x10 climate controlled units at $138. Those are just 2 units as an example that I rented about an hour ago. So I'm going to discuss this. The busy season picks up in April and they filled up to 100%. And they go home and they brag and say, oh, we are the best operators. We're full. We have a wait list. This property is amazing and we're really good at what we do. But what they don't know is that now we're in May and our company is the only one in town with vacancy. We're the only ones with available units. And we rented a 5x10 unit today for $199. And we rented a 10x10 climate controlled unit for $288. So we're talking 3 and 4 times higher rents than what our competitors are charging, because we are doing the work to find true market rent. And we're the only ones with vacancy. Vacancy is good. If you are out of units, you're not charging enough money. Just like if you're a lawn care company and you don't have any time to take on any new clients, you're not charging enough money. If you're a plumber and you don't have time to go do any more jobs and you're booked way out in advance, you're not charging enough money. There are so many entrepreneurs who do not do the work to charge the right amount of money. So in this upstate New York town, our competitors are 100% occupied, charging $138 for a unit. We are 90% occupied, charging $288 for a 10x10 unit. This is more than 2x. And this is tremendously powerful when you do it at scale with 615 units. And on a per square foot basis, you're doing 60, 70, 100% more revenue than your competitors are. So back to what I was talking about here on this Twitter thread, we had a lot of people who reached out and said, I would much prefer to be 100% occupied and then raise the rents on current tenants. That's Mark Gilbert. He operates multifamily in New Jersey. Then you have just a lot of other people disagreeing, saying that, I like to be full. Everybody should be full, and multifamily is different. But then you hear from Scott Everett, who is the founder of S2 Capital. I highly recommend you listen to his podcast episode with Chris Powers. He came on for an hour and 40 minutes and told his story. He's 32 years old, 10,000 units under management. They've raised $3 billion. And S2 and Scott Everett are some of the most impressive company and the most impressive person that I have ever had the pleasure of listening to speak. He came on Chris's podcast and talked about how he thinks about occupancy, vacancy, and revenue management. He buys a multifamily portfolio, and immediately his goal is to get down to 85% occupancy as soon as possible. If they only drop to 92, they didn't increase the rents enough. If it's up to him, he always says, I don't like to manage for third parties who worry about cash flow and doing things the unrisky way. And he goes on to talk about how the people who don't pull off this Band-Aid can really be in a tough spot. It takes longer. They find themselves missing projections, and they find themselves having to do it anyway, 6, 8, 12, 18 months later. And when I say do it anyway, I mean raise the rents to market on current tenants to what the market can bear, and it crushes IRR, it crushes your returns, it crushes your deal. So what you end up with is a lot of operators who just don't charge enough money. But Scott Everett does. His job is to get down to 85% occupancy and then lease back up. He also wants to flip units and do remodels. He has the way his business works with literally shipping in employees, contractors from out of the country and housing them on site and just knocking out a full unit flip, 10, 20, 30 units at a time in 4 to 6 weeks, all the way down to the studs, new kitchens, new appliances, new flooring, new paint, everything. Absolutely incredible. But, they can get a 15%. He says 15% year one. I don't have the notes in front of me. I have 3 pages of notes. I don't have them in front of me. 15% year one, 12% year two, 10% year three is what they underwrite for revenue increases and what they can do at a property. And he says most of that, almost all of that, is just taking turns, unit turns, when people move out to market. to market rent, not even flipping them, not even remodeling them. They are just taking tenants up to market rent. That's incredible. That blows my mind. That the people who owned these assets were not doing the work to take their properties up to market rent. Hey guys, I have big news. I recently revamped my sales and customer service team at my self-storage company using folks in South Africa. Listen to this English accent.
Hi there, my name is Anton and I'm a sales professional from Gqeberha or Port Elizabeth, which is in the eastern province of South Africa. I've been in sales for about 8 years now with experience in hardware sales with some of the leading brands in the world, such as Canon, Panasonic, and more recently Red Bull.
Okay, now the surprising part. The person you just listened to is available for hire right now, and they're asking $9 an hour. If you want an introduction, if you want to hire this person into your business or at least interview them, send me an email, nick@sweatystartup.com, and I can make an introduction and offer you $1,000 off the recruiting fee. nick@sweatystartup.com.